Picture this. While you're scrolling through social media, China is quietly making moves that could reshape the entire global economy, and what they're stockpiling should absolutely terrify Western governments. China has been on an unprecedented gold and silver buying spree. We're talking hundreds of tons of precious metals vanishing from global markets every single month. Their central bank hasn't slowed down in over 2 years. But here's what's chilling. They're not just buying gold for their reserves. Chinese citizens are being actively encouraged to buy physical silver and gold too. Why would the world's second largest economy be hoarding precious metals like there's no tomorrow? Are they preparing for a massive currency crisis? Planning to challenge the US dollar's dominance? Or do they know something about the global financial system that we don't? Some experts believe China is building a fortress around their economy, preparing for an economic war that most people don't even see coming. The timing is suspicious. De-dollarization is accelerating. BRICS nations are exploring gold-backed currencies. And China? They're sitting on a mountain of precious metals while their official numbers probably don't tell the whole story. What we uncover in this video could change how you think about your own financial future. If this already has you concerned, smash that like button, because what comes next is going to blow your mind. Sonnet 4.5. So let's get right into what's actually happening here, because the numbers are staggering and the implications are even more mind-blowing. Over the past few years, China has been accumulating gold at a pace that hasn't been seen since the days leading up to major global conflicts. We're not talking about a casual investment strategy here. This is systematic, deliberate, and frankly, it looks a lot like preparation for something massive. The People's Bank of China has been adding to its gold reserves month after month, and while they report these purchases officially, many analysts believe the real numbers are far higher than what's being disclosed. Think about that for a second. If what they're admitting to is already shocking, imagine what they're not telling us. Some estimates suggest that China could be holding double or even triple the amount of gold they officially report. That's not conspiracy theory territory. That's based on analyzing import data, mining production, and the mysterious gaps between what goes in and what comes out of their disclosed reserves. But gold is only part of the story. Silver is where things get really interesting. And honestly, a bit terrifying when you understand the strategic implications. China has been vacuuming up silver from global markets with an intensity that's caused supply shortages in certain sectors. Industrial manufacturers in other countries have actually struggled to secure the silver they need because so much of it is flowing into China and seemingly disappearing into vaults and private hands. Silver isn't just a precious metal for investment, it's absolutely critical for modern technology, solar panels, electronics, military applications, and increasingly electric vehicles. Now here's where it gets strategic. China is the world's manufacturing powerhouse, right? They produce the majority of the world's solar panels, a massive portion of electric vehicles, and countless electronic devices. By controlling silver supplies, they're not just investing in a precious metal, they're potentially controlling a choke point in the global supply chain for future technologies. If there's a shortage, if prices spike, if supply gets restricted, guess who's sitting pretty with warehouses full of the stuff? It's a strategic masterstroke that most people aren't even paying attention to. Let's talk about why this matters to you, regardless of where you live or what currency you use daily. The global financial system as we know it is built on confidence in fiat currencies, primarily the US dollar. Since the end of World War II, the dollar has been the world's reserve currency, meaning international trade is conducted in dollars. Countries hold dollars as reserves, and the entire system relies on faith in American economic stability, and the Federal Reserve is management of monetary policy. But here's the uncomfortable truth, that system is showing cracks. And China has been preparing for those cracks to become chasms. Every major empire in history has eventually seen its currency lose dominance. The Spanish real, the Dutch guilder, the British pound, they all had their day in the sun before being displaced. Is the dollar immune to this historical pattern? China clearly doesn't think so, and they're positioning themselves for a world where dollar dominance is significantly diminished or potentially ended. Precious metals, particularly gold, represent the ultimate form of monetary insurance. Unlike fiat currency, you can't print more gold. Unlike digital entries in a computer system, physical gold exists independent of any government's promises or central bank's policies. When you look at China's actions through this lens, everything starts making sense. They've been reducing their holdings of US Treasury bonds. They've been promoting the international use of the yuan. They've been establishing currency swap agreements with dozens of countries to bypass the dollar in bilateral trade. And simultaneously, they've been accumulating the one asset that has held value for thousands of years across every civilization that's ever existed. This isn't random. This is a coordinated strategy that's been in development for over a decade, and we're now seeing it accelerate. The BRICS nations, that's Brazil, Russia, India, China, and South Africa, along with recently added members, have been openly discussing alternatives to dollar dominance. There's been serious talk about a gold-backed BRICS currency that could be used for international trade settlement. Now, whether that actually materializes in the exact form being discussed is debatable. But the intention is crystal clear. These countries represent a massive portion of global population and GDP, and they're tired of playing by rules that primarily benefit the United States and its allies. China is positioning itself to be the anchor of any alternative system, and gold gives them credibility that a purely fiat alternative would lack. Let's zoom out and look at some historical context. Because this isn't the first time we've seen governments and central banks loading up on precious metals before major economic disruptions. In the years leading up to the collapse of the Bretton Woods system in the early 70s, smart money was moving into gold because the writing was on the wall that the existing monetary arrangement was unsustainable. When Nixon closed the gold window in 1971, ending the dollar's convertibility to gold, those who had prepared were protected, while those caught off guard saw their purchasing power devastated by the inflation that followed. Similarly, in the years before the 2008 financial crisis, some investors and institutions were quietly accumulating precious metals because they could see the housing bubble and the derivatives time bomb that was building in the financial system. When the crisis hit, gold prices soared as people lost faith in financial institutions and sought safety in tangible assets. The pattern repeats throughout history. Those who read the signs and prepare are protected, while the majority who trust that authorities have everything under control often suffer devastating losses to their wealth. So what signs is China reading right now? Well, let's consider the state of global debt. Government debt levels across developed nations are at historic peacetime highs. The United States alone has over $35 trillion in national debt, and that number is accelerating. Europe is struggling with its own debt issues. Japan's debt to GDP ratio is off the charts, and central banks everywhere responded to recent crises by printing unprecedented amounts of money. In traditional economics, this should have caused massive inflation immediately. But instead, we saw that inflation delayed and then arriving in waves that caught many people off guard. China has been watching this money printing with great concern because a significant portion of their wealth has historically been tied up in dollar-denominated assets. When the Federal Reserve prints trillions of dollars, the value of China's dollar holdings gets diluted. It's like being a shareholder in a company and watching management issue millions of new shares. Your percentage ownership gets watered down. This is called the Triffin dilemma, named after economist Robert Triffin, who predicted this exact problem. A country whose currency serves as the global reserve faces a paradox. It must run deficits to supply the world with enough currency, but those deficits eventually undermine confidence in the currency itself. China recognized this vulnerability in their position years ago and began systematically reducing it. Precious metals are the most obvious hedge, but they've also been investing heavily in real assets around the world. Infrastructure projects through the Belt and Road Initiative, strategic purchases of mining operations, energy assets, agricultural land in various countries, and building up domestic consumption to rely less on exports. All of these moves together paint a picture of a nation preparing for a fundamentally different global economic landscape. Now let's talk about what ordinary Chinese citizens are doing. Because this is where the story gets really telling. The Chinese government has been actively encouraging its population to buy gold and silver. Think about how unusual that is for a moment. Most governments want their citizens spending money to drive economic growth and consumption. China is essentially telling people to convert their savings into precious metals, to take money out of the banking system and put it into assets that do not generate economic velocity. Why would they do that unless they believe those citizens needed protection from something coming down the pipeline? Chinese citizens have been responding enthusiastically. Gold shops in major Chinese cities have reported unprecedented demand, with people lining up to buy gold bars, coins, and jewelry not as adornment, but as investment and savings. Silver purchases have similarly spiked among retail investors. There's a cultural component here too. Chinese culture has a long history of valuing gold as a store of wealth and a symbol of prosperity, so this isn't entirely new behavior, but the scale and the government encouragement definitely are noteworthy developments. Some analysts interpret this as China preparing its population for a potential currency crisis or major devaluation of the yuan. If you're going to reset your currency, if you're going to make major changes to the monetary system, You'd want your population holding real assets rather than being completely wiped out by the transition. It's also possible that China is preparing for international sanctions similar to what Russia faced, and encouraging precious metals ownership ensures that citizen wealth can't be frozen or confiscated through the international banking system. Physical gold and silver in your possession cannot be seized by a foreign government or locked out of SWIFT payment systems. Let's connect this to what's happening with central bank digital currencies, because this is another piece of the puzzle that makes China's precious metals accumulation even more strategic. China has been at the forefront of developing a central bank digital currency, the digital yuan. They've run extensive pilot programs, implemented it in various cities, and are methodically building the infrastructure for a fully digital currency system. On the surface, this seems contradictory to accumulating physical metals, but it's actually complementary when you understand the strategy. A digital currency gives the Chinese government unprecedented control and monitoring capability over domestic transactions, but it's vulnerable to external pressures, cyber attacks, and international isolation. Physical gold backing or reserves in precious metals gives their digital currency credibility and stability that a purely fiat digital currency would lack. It's the perfect combination of modern control with ancient stability. They can run a high-tech digital economy domestically while having the hard asset backing to command respect and trust internationally. Furthermore, in a world moving toward digital currencies, the country with the most gold has significant leverage. If international trade settlement systems eventually incorporate some form of gold backing or gold reference value, China wants to be holding as many cards as possible. They learned from watching the United States leverage dollar dominance for geopolitical purposes, freezing assets, imposing sanctions, and controlling access to international finance. China is building a system where they cannot be similarly controlled or coerced. Let's address the elephant in the room. Is this preparation for war? Not necessarily in the traditional sense, but certainly for economic war, and potentially for the disruptions that could accompany geopolitical tensions. Modern warfare between major powers is more likely to be economic than purely military, though the two are always intertwined. Sanctions, trade restrictions, currency manipulations, these are the weapons of choice because nuclear powers can't engage in direct military conflict without risking mutual destruction. China's accumulation of precious metals, combined with their efforts to secure supply chains for critical resources, their development of alternative payment systems, and their diplomatic initiatives to build alliances outside the Western sphere, all of this represents preparation for a world of increased great power competition. Whether that competition turns hot or stays cold, being economically resilient and independent is crucial. Gold and silver are financial ammunition in this kind of conflict, providing stability when other assets are volatile and giving leverage in international negotiations. Consider also the environmental and resource angle. China is the world's largest consumer of many commodities, and they're acutely aware of resource constraints. Silver is particularly interesting here because it's both a monetary metal and an industrial one. As the world transitions to renewable energy and electric vehicles, silver demand is projected to increase dramatically. Solar panels require significant amounts of silver, and each electric vehicle uses considerably more silver than traditional cars. By accumulating silver now, China is securing supplies for their industrial future while also holding an asset that's likely to appreciate significantly as demand outstrips mining supply. The solar industry is especially relevant because China dominates global solar panel production. If they control both the manufacturing and significant stockpiles of the critical input material, they essentially control the global solar supply chain. Any country wanting to transition to renewable energy would be dependent on China. That's not just economic power, that's geopolitical leverage of the highest order. It's the same strategic thinking they've applied to rare earth elements, where they control the majority of global production and processing capacity. Now, what does all of this mean for everyday people watching this video? First, it means that major shifts in the global financial system are likely coming, and those shifts could happen faster than most people expect. When China feels ready, when they've accumulated enough hard assets, secured enough alternative partnerships, and built out enough parallel infrastructure, they may make moves that force changes to the existing system. That could mean significant volatility in currency markets, disruptions to international trade, inflation or deflation depending on how things unfold, and potential restrictions on capital movements. Second, it suggests that holding at least some portion of your wealth in physical precious metals might be prudent. Now, I'm not a financial advisor, and this isn't financial advice, but the principle of diversification exists for a reason. If major governments and central banks are treating gold and silver as insurance against monetary instability, individuals might want to consider the same logic. The amount varies based on individual circumstances, but having something tangible that exists outside the banking system and can't be devalued by money printing has historically proven valuable during periods of economic turmoil. Third, it means paying attention to geopolitical developments because economic and political issues are deeply interconnected. Trade wars, sanctions, alliance formations, these aren't abstract issues for politicians and economists to worry about. They directly impact currency values, inflation rates, employment, and the prices you pay for goods and services. China's precious metals strategy is a signal that they're preparing for significant changes. And being aware of those preparations helps you understand the direction global events might take. We should also consider the possibility that China's strategy could backfire or face significant challenges. Accumulating massive amounts of precious metals ties up capital that could be used for other investments or economic development. If the global financial system proves more resilient than China expects, or if their timing is off, they could be sitting on assets that aren't performing while missing opportunities elsewhere. Additionally, other countries are aware of what China is doing and are developing counter strategies. The United States and its allies aren't passive observers. They're working on maintaining dollar dominance, strengthening alliances, and creating their own contingencies. There's also the question of whether China can successfully transition from an export-driven, manufacturing-based economy to one driven more by domestic consumption and services while simultaneously challenging the existing global order. That's an enormously complex undertaking with many potential pitfalls. Economic transitions are difficult, and adding geopolitical ambitions on top makes success far from guaranteed. However, the very fact that they're making the attempt, backed by massive precious metals reserves, means the global economic landscape is going to experience turbulence regardless of the ultimate outcome. Looking at the timeline, some analysts believe we're approaching an inflection point within the next few years. China's preparations suggest they're getting ready for something, and the acceleration of their gold and silver purchases indicates that something may be approaching. Whether it's a planned move on their part, such as announcing gold backing for the yuan or a BRICS currency, or whether they're preparing for an anticipated crisis in Western financial markets, the build-up phase appears to be reaching maturity. When exactly things might shift is impossible to predict precisely, but the groundwork is clearly being laid. For investors and savers, this creates both risks and opportunities. The risk is being caught unprepared if major currency disruptions occur. The opportunity is recognizing these trends early and positioning accordingly. Precious metals are one option, but so are other hard assets, developing skills that will be valuable regardless of economic conditions, building community connections, and diversifying not just financially, but in terms of knowledge, capabilities, and resilience. It's worth noting that throughout history, periods of monetary transition have created both winners and losers. Those who saw the changes coming and adapted thrived, while those who assumed the status quo would continue indefinitely often suffered significant losses. We're potentially living through one of those transition periods right now, and China's gold and silver buying spree is one of the clearest signals that major players are preparing for fundamental changes to how the global economy operates. The question isn't whether China is preparing for something. The evidence is overwhelming that they are. The questions are what exactly they're preparing for, how it will unfold, and how we can best prepare ourselves and our families for the changes ahead.